Ladies and gentlemen, good day and welcome to the KIMS Hospital Q1 FY23 earnings conference call hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rahul Jeewani from IIFL Securities Limited. Thank you, and over to you, sir.
Hi, good morning, everyone. This is Rahul from IIFL Institutional Equities. I welcome you all to the first quarter earnings conference call of KIMS Hospitals hosted by IIFL. I thank the KIMS management team for giving us the opportunity to host this call today. From KIMS, we have with us Dr. Bhaskar Rao Bollineni, Founder and Managing Director, Dr. Abhinay Bollineni, Executive Director and CEO, and Mr. Vikas Maheshwari, CFO. Over to you, sir, for your opening comment.
Yeah. Hello.
Yes, sir, you can go ahead.
Okay. Good morning and a warm welcome to our dear investors. The nation is celebrating Azadi Amrit Mahotsav, and we are just 100 hours away from the landmark 75th anniversary of our independence. As such, the country is gripped in the state of patriotic fervor. I share with you the elevated mood of the nation on this great occasion and extend you a healthy welcome to this investors meeting. It gives me great pleasure to apprise you of the financial results of quarter 1 for the financial year 2022 to 23. As you are aware, last year we entered into a definitive agreement to acquire a majority stake in the prestigious Sunshine Hospitals, which has a national reputation in the orthopedic segment. Now that the process of acquisition is complete, we are able to witness demonstrable results in Q1 2022-23. In the coming quarters, as the integration gathers further steam coupled with revenue growth and rationalization of cost, we expect the acquisition to give much better results. We remain very optimistic about the potential of the acquisition. The combined strength of these two entities are expected to yield good results due to enhanced patient reach, increased patient comfort, and professional expertise. KIMS has already carved a special niche for itself in the areas like organ transplantation, neurosciences, oncological sciences, renal sciences, and gastrosciences. The acquisition of Sunshine Hospitals will enable us to reach more patients, particularly from the orthopedic segment. The financial results for the first quarter of the year are as follows. Consolidated revenue from operation grew by 33% quarter-on-quarter basis to rupees 4,955 million. Consolidated EBITDA, excluding other income and Ind AS adjustments, grew by 9% on quarter-on-quarter basis to 1,312 million. Consolidated EBITDA margin, excluding other income and Ind AS adjustments, stands at 26.5%. The slight decline in EBITDA margin is due to the consolidation of Sunshine Hospitals, which is operating at 17.8%. EBITDA margin and also increased costs for employees, doctors, and power and fuel cost at existing KIMS hospitals. You all know that the first quarter we don't increase every year the employees, the price hike for the patients. That's why in the first quarter, because of the employment expenditure, will bring down, but it will be able to set down in the coming 3 quarters. The group continues to have a very strong balance sheet along with a healthy operating cash flow and has built a strong financial foundation for the next phase of growth. Group continues to be net cash positive, 1,961 million, which will be deployed for ongoing and upcoming projects. On the operational side, both IP and OP volumes have shown growth by 21.7% and 19.9% respectively on quarter-on-quarter basis. The average revenue per patient, the average revenue per operating bed has improved by 8.5% and 20.1% respectively on quarter-on-quarter basis. Average length of stay has improved to 4.14 from 4.59 on quarter-on-quarter basis. Since inception, we have been able to continuously introduce new therapies, departments on board, and qualified consultants to grow our business. Besides this, having sharp focus on strategic acquisitions and mergers at our core market, that is Andhra Pradesh and Telangana, we have been able to increase and deepen our footprint in both Tier 1 and Tier 2 cities and reach to 3,600 beds in only 2 states, AP and Telangana. All the expansion and acquisition were done in a very prudent manner and at a very lucrative valuation, which is reflected in industry-leading EBITDA margin and ROCE. Over the period of time, all the internal accruals and funds raised were deployed very prudently and efficiently for the growth of the company. Even after the acquisition of Sunshine Hospitals, the company remained net cash positive, which will be deployed for further growth in the company. We are confident that the projects undertaken by the company will yield good results and improve the financials of the company in the coming quarters. Let me now speak about the accomplishments of our doctors. We are proud that our Chief Neurosurgeon, Dr. Manas Panigrahi, had performed more than 20,000 surgeries in his career, which is a rare feat not matched by many in the world. No wonder patients come to him from all parts of the world. I hope all of you have seen the annual report. My statement therein amplifies our vision, our philosophy of growth, and our values. We have imbibed what the famous jurist Nani Falkewal said: it is good to be big, better to be good, and best to be both. We intend to be both in our journey ahead. I conclude now, summing up our values as mentioned in the chairman's statement. The best single word, we, not I. The best 2 words, serve others. The best 3 words, be the best. The best 4 words, let us all grow. The best 5 words, fruits of efforts to society. Thank you very much for a patient hearing. Rahul, can we open for question and answers?
Okay, thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question comes from the line of Chintan Seth from Samiksha Capital. Please go ahead.
Yeah, thank you. Thank you for the opportunity. Hope I'm audible. Congrats on a great set of number and consolidation of Sunshine. Sir, 2 set of questions. One is related to the quarter. If I look at the IP volumes, it seems that the occupancy on the total bed capacity has both sequentially as well as on a YoY basis has softened a bit. Is this related to seasonality? And second is on the ARPOB side, given the base quarter had COVID, patients into the IP volume, this ARPOB seems to still continue to grow on that base on a YY basis. If you can highlight, how should we expect what will be the trajectory of ARPOB given the mix will move down to normalization with lower cash and increase in schemes and Arogya scheme patients in the ensuing quarter. That's second. And third is on the pledge share. If you can provide some color on how should we when should we expect them to, because from December quarter to June there is an increase over there. So if you can throw some light on how should we look at it going forward. Yeah, that are the 3 questions.
So, Dr. Abhinay speaking. So, on your first point, we had seen a very dull first month of the quarter. So, April and part of May was unusually lower than what we had expected it to be. Honestly, we've done some work across the country to understand why this pattern has been there, but we weren't able to figure out why. Anyways, thankfully, mid of May and June, July have been continuing to do quite well. We believe that there was a one-time lull in the market. I think either the overall hangover after COVID and people wanted to take a break from elective procedures and all of that, because of which we've seen a dip in volume both in April and mid of May, which resulted in lower occupancies. And as the low-end elective works stop coming down, there has been some impact on the ARPOB. But the month of May, June, and July, or even the month of August, things are completely back on track and as per budget.
Okay.
So to add to what Dr. Abhinay has told, if you look at our ALOS has slightly improved.
Right.
So the ARPP has increased, so we have improved our ALOS from 4.6 in the March quarter to 4.3. So that has resulted into the lower occupancy, but the revenue, as Dr. Abhinay has told, the April and part of the May was little dull. We could have been able to match up the revenue, and occupancy was slightly got impacted because of the ALOS also improved.
Correct.
Those are able to improve both ARPOB and ARPP, both year-on-year basis and quarter-on-quarter basis.
So how should we look at ARPP and ARPOB going forward? Because you are saying electives were lower. I presume there were no COVID patients in this quarter, and the cash mix, it seems sequentially there is little change. It remains slightly lower, 57.5 in Q4 22 versus 54.7%. But insurance has increased from 17.5 to 24. So given the mix is slightly lower in the cash segment, still our ARPOB and ARPP has improved. So I'm just trying to understand that ARPOB, how should we read ARPOB going forward?
So this was the very normal quarter. June quarter was very normal quarter, and free of COVID, because for the last 8 quarters, 2 years, we have seen COVID coming, COVID going, or some disruption here. But the quarter first of this year thankfully was free of the COVID, and we saw the normalization of the business except for the April month, which was aberration. So we believe that whatever the ARPP and ARPOB we have shown, we should be able to maintain that trajectory and grow slightly as we go up in the coming quarters. At the same time, cash and insurance has slightly got changed because of integration of the Sunshine Hospital at the group level. But at the KIMS level, it's more or less remains same. Since Sunshine was having slightly higher portion of the insurance, the mix has got changed. So, but if you look at the both cash and insurance together, we have been able to maintain at roughly 80% plus minus 1%, which was the earlier case.
So that mix we are targeting to maintain going forward.
So 80% cash and insurance we should be able to maintain, plus minus 1%, because that we cannot predict. And corporate and ROGC should continue to be at around 19 to 20% going forward.
Sure. And sir, on the pledge, if you can update, I'll jump back in.
I think the pledge will come down coming 1 or 2 quarters, but it will sustain for another 1 or 2 years, because the shares that has been pledged in the medical school, that over a period of time it will go off. The increase of this pledge is because the price fluctuation is there. To cope up that, we need to put a little more increase on that. And actually, we were planning to shift from one bank to other bank because of the interest benefit we are getting. That is the reason.
Sure, sir. Okay. Thank you.
Next question comes from the line of
Very
Sagar
good.
Shah from Phillip Capital. Please go ahead.
Yeah, good morning, sir. I have a few questions actually. My first question was related to your occupancy.
Disturbance from the background, if you can just check that.
Now you can hear my voice now?
Not very clear.
Hello? Hello, you can hear my voice, sir, now?
No, you're not. Your voice is not audible.
One second. Now you can hear my voice, sir?
Yeah, go ahead.
Yeah, my first question, sir, was related to your occupied beds. First of all, how do you derive such this occupied beds actually? Out of your 3664 beds, around 3600 beds are occupied. So basically, how do you derive to this figure? Basically, why are not all beds are occupied? My first question was that.
Sorry, your question is not very clear. Neither can we hear you clearly.
Okay. I'll repeat again, sir. Out of your bed capacity of 3,666, your operational beds are 3,222. So basically, first of all, I want to clear that how do you derive this out of your bed capacity? What is operational and what is non-operational?
So let me. So if you can go through with the presentation, page number 18. This was the query from most of the people earlier also. So if you go through the page number 18, at the group level, including Sunshine, we had a bed capacity of 3,666, right? Out of that, 3,220 is operational, means this is the bed which is open where we can admit the patient. 44 beds are capacity, which as the occupancy goes up, we will open over a period of time. Now this 3,220 beds are being divided between census and non-census beds. So the census beds are 2,760 and 462 is the non-census bed, which is your emergency, dialysis, daycare beds, etc. Now the occupied beds for the quarter at the group level 1,807. So this 1,807 is being calculated based on the census bed operational, which is 2,760. Based on that, the occupancy is being calculated by you.
To clarify a little more, the question what you asked, what do you mean by 3,200? That means these are all the beds are being employed by the nursing staff, the class 4 employees and everybody. The rest of the 400 beds are also, everything is there. We don't need to put any capex further. It is being a healthcare is going to be seasonal at that time. We will try to accommodate those beds also. So as on today, every day we will be able to count only these 3,200 beds. In extraordinary cases, when there is a like pandemic, like dengue seasons and all, if there is a need, we will be able to open those beds. So operational capex we want to minimize. That's why we will call these operational and non-operational beds. Is it clear?
Okay. Yeah, absolutely got your point, sir. Now my second question was related to your AP matured assets and AP acquired assets. As we are seeing your ARPOB trajectory is going up actually, if we compare FY21-22 and now Q1 FY23. Now my question was that do you see these hospitals ARPOBs going to the level of Telangana, to the KIMS matured assets, which are already having an ARPOB of 42,581 in the 1 to 2 years?
No. So we don't see these two are different markets altogether.
Okay.
In the foreseeable future, I don't see the AP either matured or acquired getting anywhere close to the ARPOBs of Telangana markets. They're completely different micro markets, and it will be unrealistic to assume that they will even get closer to that number.
Since they are in tier 2, tier 3 cities, right? Because since they are in tier 2 and tier 3 cities.
Exactly, yeah.
Just to add
Okay.
what Dr. Abhinay has told, if you look at the trajectory which is in the page number 19 of the presentation, in FY21 the ARPOB of AP mature was 13,000 roughly 600, which moved to roughly 17,000, and in case of acquired assets which was less than 10,000 has reached to the 14,000. So the trajectory of the growth is there, but obviously it will not match up to the Telangana's market, which is Hyderabad market basically where we operate, which is different market altogether.
Okay. Okay. Going ahead, while occupancy improves in both these AP mature and acquired assets, so where do you see the ARPOBs reaching for these two?
See, the other important thing, what you also know, this Telangana one, the per bed investment is entirely different from the Title 3 of Andhra. The per bed investment is also based on these ARPOBs.
Correct.
Yeah.
So, where do you see the AP matured and acquired assets ARPOBs reaching, sir, in the next 2 years?
I think it will steadily grow over, like the mature assets have been growing at 4-5%. That will only continue to grow over a period of time.
Okay. So my next question was related to Sunshine. Sunshine is the current occupancy is only 39.5%, and whereas your ARPOBs are almost 62,706, which are almost higher as compared to all your others. But still your EBITDA is around 17.5. So basically, do you see the occupancy levels going up for Sunshine and also the EBITDA margins going up for Sunshine in the next 1 to 2 years once you integrate all the facilities of all the KIMS facilities to the Sunshine, once you integrate all the other treatments also in Sunshine which KIMS has?
Yeah. So as far as Sunshine is concerned, we've just changed the brand name from Sunshine to KIMS a week ago. Between the two facilities that we're focusing on, Gachibowli, most of the clinical programs have been onboarded or will be onboarded in the next 1-2 months. And 6 months from there, we should see that hospital occupancy go up further and dependency on orthopedics come down. So as far as the Secunderabad hospital is concerned, we are likely to move into the new campus by end of the year or early part of Q4. And once that happens, we will then induct a lot more clinical talent, which will then reduce the dependency on orthopedics and make it a more multi-specialty hospital. When these two things have been executed, we're pretty confident we'll get to a higher occupancy level that we're seeing in KIMS hospital in Telangana. And also the margins should stabilize somewhere close to what the margins are in the current in KIMS Telangana.
The current KIMS
KIMS Telangana hospitals, the margin profile will also be very similar to what we're seeing at KIMS Telangana today, once these two hospitals of Sunshine mature and the new clinical teams are onboarded.
At the same time, just to clarify why the Sunshine ARPOB is higher, because that is roughly 46% of the revenue of Sunshine comes from the ortho. So that is why their ARPP and ARPOB is slightly higher.
Their ALOS is much lower than our KIMS currently because of its dependency on just one specialty, or 50% of it coming from one specialty. As we make it more multi-specialty, the ALOS will increase. The ARPOB could potentially come down. But we are pretty confident we'll be able to maintain the same margin profile that we are maintaining at KIMS Hyderabad.
Okay. So my last question is to your case. How are things progressing for Nashik Hospital and the construction?
You're not audible again. Could you please repeat the question?
Which hospital?
Your new hospitals which you have, what is the progress on the new hospitals that you are building on in Nashik and Bangalore?
Yeah, like we said, we've completed both Nashik and Bangalore, and we're pretty confident Bangalore should be operational in the next 15 months. Likewise, Nashik also should be operational in the next 15 months, 15 to 18.
Okay. Sure. Thank you so much.
Plan.
Okay. Thank you so much. All the best.
Thank you.
Thank you. Next question comes from the line of Rahul Jivani. Please go ahead.
Yeah, thanks, sir. So sir, you indicated that our occupancies have been lower because of some sort of an impact in April and May. So if you can quantify what would have been our occupancies during the quarter had we not seen this impact, and then what is your guidance for your full year occupancies for the KIMS-based business ex Sunshine?
I think it would have been very similar to what we had seen in Q4, Rahul, if not for this, something that happened in April and mid-May. We would have been, what we are seeing in, June, July, and so far in August are occupancies which are very similar to Q2 or a little higher, in fact.
So closer to 74-75%. Hello.
Sorry, come again, Rahul.
So yeah, Dr. Abhinesh, so I was saying that for the July-August month, then you are trending closer to 74% kind of.
Great. So June, July, August, so far the occupancy trend has been around the same number.
Sure, sir. And with respect to Sunshine, so obviously when for the 5 months of last year's fiscal, when we were operating the asset, we had EBITDA margins of around 20-21% for Sunshine. And this quarter, margins on Sunshine have dropped to 18%. So what has led to this margin drop for Sunshine?
So Rahul, the Sunshine has got integrated line by line this time for the first time. In the Sunshine Q4, there was a 4 to 5 rupees of the other income. Earlier, we were including that as a part of the EBITDA. Now, after getting the feedback from all the investors, we understood that other income should be excluded from the EBITDA margin. So if we exclude that, we should be on the same type of trajectory.
Sure, sir. And earlier you had indicated that Sunshine can possibly get to 25% margins because and the margins in Sunshine will be lower than what KIMS does in its mature hospitals in Telangana because of the rental expenses at Sunshine. Now, given that you are relocating the Secunderabad campus or the Secunderabad hospital to this new campus where you might have these rental savings again, what is your outlook on Sunshine's EBITDA margins 2 to 3 years down the line?
So I think as the revenue ramps up, we should be able to get to the KIMS Telangana margins. We should be able to get to the same number as Sunshine was.
Okay. And in terms of revenue ramp up, if you can just elaborate what kind of a revenue ramp up you are looking at Sunshine Hospital?
So I think the current occupancy is as low as 40%. There is headroom for growth by almost 30% to maintain the level of occupancy that we are typically seeing at a KIMS hospital. And given that 50% is driven by just orthopedics and 75% of the revenue is driven by orthopedics and cardiac, so all the other specialties together typically account only for 25%. But whereas in a KIMS like hospital, you will see that both these specialties don't contribute to more than 30%. Now, it may not be possible to bring it to as low as 30%, but the intent is to bring a lot of these new specialties and a lot of these new clinical talent and be able to scale up and bring down the dependency of ortho and cardiac from the current 75% level to around 40 to 45%.
Sure, sir. And with you targeting to improve the multi-speciality mix at Sunshine, obviously you will have to onboard new clinical talent around some of these other specialties. So how have those discussions been ongoing with respect to onboarding new clinical talent at Sunshine?
So as far as Gachibowli, so we're currently focusing on Gachibowli because the hospital is operational and things are in place. We've been able to attract almost 60-70% of the talent that we had planned. Most of them have joined. The others should be joining as we speak or in the next few weeks. By October, we're pretty confident most of the talent gaps will be completed. And from October onwards, 1 year from there, we should look at that hospital reaching a certain level of maturity.
Sure, sir. And these are all new medical talent. You won't be moving any of your existing doctors from KIMS flagship hospitals to any of these Sunshine hospitals.
No, we have in the plan so far, we have not seen anyone moving from our flagship hospital or from our Kondapur hospital to any of these hospitals.
Sure, sir. And can you just elaborate on your expansion plans as well, both organic and inorganic, in terms of what's your inorganic pipeline looking at over the next 1 to 2 year period?
There are quite a few opportunities, Rahul, but I don't think I'm allowed to speak on any of them currently because we don't have anything definitive. But we are seeing good traction that we're getting in the southern markets where we have some good hospitals available for a transaction. But as far as what is available in the public space is our our Nashik facility and Bangalore, both of which are on track, and we should be able to complete them in the next 15 to 18 months. But hopefully by the next investor call, we should bring a couple of new proposals on the table and a couple of new announcements on the table.
Sure, Dr. Abhinay. And in terms of markets which you would be interested in for some of these inorganic assets would largely be the West and the South India markets or the Karnataka market?
Yeah, I think we're continuing to just focus on these markets. We're not looking anywhere beyond this. I think the opportunity here itself is quite large. If we continue to just stay focused and be able to deliver the same set of numbers that we're doing at KIMS, Andhra Telangana, we should be able to scale up sizably here.
Sure, sir. And just one last question from my end is that you were planning to add 1,000 beds in your core AP and Telangana market over the next 3 to 4 year period, with let's say 500 incremental beds coming up at Kondapur. So how are those plans progressing, and when can we see this incremental capacity coming up in your core market?
Yeah, I think we're sticking to the timelines that we had published, Rahul. Kondapur is going fairly on track, and we should be able to move into the new campus based on what we had earlier projected, 36 to 48 months. We're on track to move there. I think except for Dilshuk Nagar, which we had earlier planned, everything else is on track. We're trying to see how we can expedite Dilshuk Nagar, but yeah, most of the other projects are all on track to complete.
Sure, sir. Thank you. I will join. Thank you.
Thank you. Before we take the next question, a reminder to all the participants that you may press star and 1 to ask a question. Next question comes from the line of Praveen Sahai from Edelweiss Wealth Management. Please go ahead.
Thank you for taking my question. So my question pertains to the Telangana KIMS matured asset, where there is a, last year to this year, the ARPOB were on the lower side. So can you give some detail that is it because of the, the COVID or because of a higher occupancy or something, this is down, or is there something else also?
So if you look at, it is definitely lower. If you look at the Q4 number for Telangana mature, is around 44,000 versus FY22 has been around 46,000. So there is that 5% difference in the ARPOB, and that is we should attribute that to some of the high-end work that we had done during COVID on the lung transplant, on the ECMO services that we offered, and the other transplant services that we offered, which we had seen a little dip in the first quarter of this year. But again, if you look at June, July, August, we've been seeing a very good, healthy trajectory on the transplant services as well as the other services that we're offering. So I think we should assume that the ARPOB will be between the range of 42 to 45,000 moving forward for the Telangana mature.
Okay. So 42 to 45,000 would be the normal range for this mature facility.
That's what we've been seeing in Q4, Q1, and the last 2 months, July and August.
Okay. So this is there any further scope for improvement in the payer mix or the price hike?
So there is a potential for price hike but the way we've been always doing price hikes is, if we don't see visibility of growth through volume or through adding new specialties, that's when we resort to a price hike. but the idea is to see how we can keep the cost lower for the end consumer. So at this point, we don't see the need for any price hike in most of our hospitals. We see great visibility of growth coming in from the current facilities through addition of new specialties, or the current newly added specialties are also continuing to grow. So I think at least for the foreseeable next few quarters, we don't see any intent to do a price hike on the cash patients. Insurance patients, anyways, there's an auto renewal that happens once in 2 years, which we are continuing to pursue with all the insurance companies.
So that's a 2-year period when it's due, like last year or?
The contract says 2 years. By the time we execute it, it becomes 2.5, 3 years because of the lag from the insurance provider.
Okay, but due is when?
They're all different contracts that we have signed in different time zones. So you should assume most of them will undergo a renewal this financial year, at least 50% of them.
Oh, okay. The next question is related to the AP acquired asset, and there is a deterioration in the occupancy. So what is the normal entry?
Can you repeat that question? I couldn't follow that. AP acquired asset?
To AP acquired asset and related to the occupancy. So
okay.
What is the normal rate one can see for this acquired asset in terms of the occupancy?
What is the occupancy rate that we should assume?
Yes. So in the normal scenario, not like the COVID is gone. So now what is the normal, 75, 76% is the normal rate of occupancy out there, or it is on the higher side?
No, I think 75-80% is what we have been seeing in our AP matured assets in the past. We should be able to get to that kind of a number even in our acquired assets moving forward.
Okay. That's it. Thank you. All the best.
And also, Praveen, just to add, if you look at the AP acquired assets, the loss improvement has been good. So you should also factor in that while calculating the occupancy if you are comparing like-to-like basis.
Yeah, also to extend this question, as you mentioned that the ARPOB in entire the AP matured or acquired asset has been improved. So that is largely because of mix changes in clinical mix changes or the price hikes or something you had done?
You're saying ARPOB in the acquired assets from FY22 has changed to Q1 FY23. Is that the question?
Yeah, so overall, in the last 3 years, 21, 22 and 23 first quarter, we had seen a good improvement in the ARPOB for the matured asset as well as acquired asset for AP. So what exactly driven those numbers?
If you look at the ALOS for the acquired assets, we'll speak about the acquired assets first. The ARPOB has moved from 9,881 in FY21 to almost 14,000. But also the ALOS has reduced from 6.82 to 4.36.
Okay.
So a part of this is driven because of the reduction in ALOS. We have not done any change in price hike. We've not done any price change for the last 1.5 years in most of these acquired assets. And also a lot of these new clinical, because this acquired assets are only 4.5 years old. So in FY21 they have been 2 years old. So as things mature in the hospital, these specialties also mature and start doing more tertiary and quaternary care work. So that is what has driven the growth in the ARPOB.
Okay. Thank you, sir. Thank you.
Thank you. Next question comes from the line of Kagan Tareja from Ask Investment Manager. Please go ahead.
Good morning, sir. I hope I'm audible.
Little loud, please.
Okay. Sir, my first question is on the depreciation. It's grown. I understand you have Sunshine line by line consolidation this quarter, but there's a fairly outsized increase in depreciation. Could you explain the breakup of depreciation and amortization is on that entry?
So your point is 100% correct. Is the depreciation is increased because of the Sunshine mainly. In the Sunshine, we have operationalized one of the Kepler and the Robo, which we have bought and got operational in this quarter, capitalized this quarter. So one depreciation has come because of that. Secondly, this, as you are, we have declared that Secunderabad facility, we are moving to new facility at Begumpet location. So whatever this, and these assets are leasehold buildings. So whatever this leasehold improvements portion is there, some accelerated depreciation has come because of that.
So the current rate of depreciation is sustainable going ahead?
It will, yeah. So for the next 1 or 2 quarters, it will be there because of we are shifting to the new facility. Once the new facility is up and running, we are investing something like that 80 crore rupees of the money for the refurbishment and better facility for the Sunshine. So that depreciation will start. So yes, the run rate should be the same. Slightly, maybe slightly higher, but it should be on the same range.
Okay. Could you, I mean, also since, you know, this consolidation probably happens only starting FY23, if you could give some idea on you know, how does the Ross block and goodwill and, you know, intangibles compare or stand today, and how does it compare versus last year?
The provisional PPA work is being done, and based on the provisional work, roughly 180 crore rupees of the equipment which is coming, and roughly 140 crore rupees of the goodwill which will come, and some goodwill brand intangibles of roughly 20 crores will be coming.
Okay. And what is the current cash position and the debt position?
At the group level, we have a cash of roughly 350 crore rupees and the gross debt of 150. So net cash of roughly 200 crore rupees. I think is 196 precisely is the cash which is available.
Right. And I mean, your
including Sunshine at the group level.
Right. Your capex budget for this year, I think you've been talking of, if I remember correctly, a capex, annual capex of 350 crores. If you could just, you know, sort of validate that number, and also funding for the capex, would you be, you know, taking the cost to debt for funding the capex?
For the ongoing project, which is at our Bangalore and Nashik, we have already told this in the 18 months we'll be spending that much of the amount depending upon that. Other projects which we are pursuing in the South India, it all depends upon what type of opportunity, whether it is leased assets, we are buying it out, or it is acquisition. Depending on that, the capex plan will change, or the capital outlay will change.
Okay. What would be the capital outlay for budget for FY23?
So the Bangalore, we are spending something like that 350, out of that 60 crore rupees has gone. So the balance money will be spent at around 18 months time. And the balance 170 crore rupees of the Nashik, which we have given the indications 170, 180 crore rupees of capex, that will go in 18 months time. So that is the broader two project which is concrete and for which we are spending the money. Rest all depends upon what type of opportunities we are getting, whether it is leasehold, buyout, or some acquisition opportunities which we are looking at. So based on that, the capital outlay will be there. But to give assurance to you, right now we are having a 300 rupees of the cash lying with us, or net cash of 200 crore rupees. We are generating something like that 350 to 350 rupees of the free cash flow every year. So even if some opportunities comes of 300, 400 rupees of the acquisition, there may be a intra-quarter, intra-year, there may be loan, but over a period of time, it should be paid out of the internal accrual.
Right. And, I understand that Sunshine will scale up over the next 12 to 18 months. You have your plans around it. But then by the time, Sunshine reaches an optimal sort of occupancy and its benefits start flowing to the operating margin level, your new facilities in Bangalore and Nashik start coming in. Right. Would it then be, a reasonable inference that net margins at the operating level should remain stable at where they are, or do you feel that there is in spite of, those new additions coming through, there's room for, margin expansion because of efficiency?
So, Sunshine, let me bifurcate into two parts. One is the KIMS and one is the Sunshine. Sunshine is, as you told correctly, it is sitting on the operating leverage. And as the incremental revenues start coming in, almost 50 to 60% of that directly gets added to the EBITDA, and the profitability after the tax it gets added on that. So that is one kicker which we are seeing, and we have given the indication that the Sunshine is a great acquisition, is a great potentials to grow, and we can develop the EBITDA from here in the next 18 to 24 months time. So that is the great potential. As far as the KIMS is concerned, this quarter particularly for the Telangana market, the EBITDA got little bit impacted because of the increments to the doctors and other employees, non-medical employees, etc. And there was some cost increase in the power and fuel cost. Now as the rainy season is started and the winter comes, we hope that at least the power and fuel cost which we have seen going high should get little bit moderated. And as the revenue ramp-ups happen, that cost on the increment of the doctors or the salaries should get absorbed. So the EBITDA margin which we have shown, I think it should be sustainable from there, and little bit is scope for the improvement from there.
Okay, but as post 18 months from now, when the two new hospitals come on board, obviously, their occupancies will ramp up over a period of time, but the costs will kick in right away. Would that put some pressure on margins? It might be transitory, but I'm simply trying to understand, would there be some pressure on margins because of that?
I don't think we will see any pressures on the margins after 18 months. Maybe we have plans we are negotiating. That's how we have been historically looking at it when these are all there for 18 to 24 months. Now onwards, we'll look how to improvise our margins beyond 24 months. So I think maybe we can sustain.
Okay. And so one last question. If you look at, the hospital segment as a whole, the listed hospital segment, FY22 has been a year where every hospital has shown an ARPOB increase of significant 15 to 20%. And, individually when you talk to them, each of them says, case mix, payer mix. My assessment or understanding is that, in any catchment area, the incidence of any given disease cannot drastically change in any given year. That being the case, how do you put down a 15 to 20% ARPOB increase for the entire industry down to these factors? I would have thought, the only possible explanation is that there's been a reset in prices or, procedure costs, and that's what's led to it. If that is the case, would it not be an unsustainable phenomenon going ahead?
This is a great question actually. So I will not be able to comment on the other companies, but since we are recently listed and a lot of data is available in the public domain, I request you to, if you look at our FY19, our corporate and ROGC mix was roughly 30%, and cash and insurance was 70%, which every year on the improvement on the payer mix, we have brought it down the corporate and ROGC mix, which right now, including Sunshine integration, stands at roughly 20%. So 10% movement from the corporate to cash and insurance. This is one which has got added into the ARPP and ARPOB improvement. Secondly, we have added few of the clinical program like heart and lung program, which are high ARPP programs, etc., and giving us a good visibility and the revenue in the last. We started this program 18 months before, right? So 18 months, if you look at that, has also given us a flip towards the increase in the ARPP and ARPO. This quarter, in spite of there is no COVID, because there was always with the analysis and investors, how much is the COVID or non-COVID, that debate was always there. But since the June quarter was full, clean, normal business, none of the COVID business, even the vaccine business is also not there. whatever the EBITDA and revenue and occupancy, ARPOB, ARPP we have shown, I think that is more or less is sustainable.
And also, if you look at the numbers, at KIMS especially, if you refer to slide 19, and you look at Telangana KIMS matured, the ARPOB was 2 years ago 39,000, now it's moved to 42,000. So it's not that pre-COVID and post-COVID things have changed substantially, at least at KIMS. And like Vikas rightly said, what changed in Telangana KIMS for this growth in ARPOB is our cash patients have increased, and that is because of introduction of 2 new specialities on the transplant services side, where the ARPOB is as high as 1 lakh per day per bed. And also because a lot of new doctors got added, which increased a lot of new cash patients and insurance patients. So whatever growth has happened is because of those 2 specialties and those 2 doctors, plus the degrowth in the ALOS from 4.74 to 4.27. So these 2 factors very clearly indicate the reason for growth in ARPOB. And also the growth is not more than 10% at a Telangana level. Same is the case with mature assets and acquired assets of AP. It is largely driven by degrowth in ALOS, plus a lot of these new specialties maturing. That's how we have seen it.
But what was your ALOS pre-COVID? I think your ALOS pre-COVID was already lower, and then it moved up during COVID, and then it's gone back to where it used to be, if I remember it correctly.
So that's correct. So we were at 4.5 and 4.3. Now we have come back to the normal level at 4.3.
Yeah.
So because of the clinical program and ARPP, etc. going up, it has moved up. The ARPP was something like that 81,000, 82,000 in FY19 with a loss of 4.5. Now the ARPP has moved to roughly at the KIMS level at 1,13,000 and at the group level 1,25,000 with a loss at 4.1. So the ARPOB is 10,000. So obviously there is as Dr. Abhinay has told, there's a lot of clinical deployment which we have done, and the new doctors team and the high-end specialties which we have added. That has also resulted into the increase of ARPP.
Yes, just one final question on the inpatient volumes and OPD volume flow. I mean, it's all been disrupted over the last 2 years because of COVID. This quarter, everyone's reported very strong OPD flows. IPD flows might have grown, but not at the same rate. But once all of this cleans up on a normalized basis, if I look at inpatient volume growth CAGR for any hospital over a 5 or a 7 year time frame, it's normally 3 to 5% is the CAGR range. Would you concur with the view, and would you think that going ahead, barring COVID or COVID-like situations, that's the baseline growth for inpatient growth in a given hospital? I understand you might add new hospitals and so on, but for existing base of hospitals.
Yeah, you're right. I think from a mature hospital point of view, the volume IP volume growth will be in that ballpark range.
And OP volume would it generally be an 8 to 10 sort of a multiple of IP volume?
That's how it should be.
Okay. Thank you, sir. I'll get back in the queue. Thanks.
Thank you. Next question comes from the line of Bhavya Gandhi from Dalal and Broacha. Please go ahead.
Yeah, thank you for taking my question. A couple of questions that I just wanted to know whether we maintain our revenue guidance. Yeah, and what would be our ROC level, target ROC for the entire year and maybe for a couple of next 2-3 years after the Sunshine merger?
Hi, Bhavya. So I don't think new guidance for any company. What we have always stated that time we have CAGR a combination of both organic and inorganic growth, and our effort is we should be able to maintain the 15% revenue. It may be a one quarter or 2 quarters here and there, but overall, on the trajectory, we should be able to maintain this both organic and inorganic, mainly with the inorganic growth and greenfield project which is coming. We should be able to go ourselves based on that. As far as IoT is concerned, Sunshine integration has been completely being done with us, and there's a large amount of the goodwill which has come into along with this. Excluding goodwill, which shows the underlying business and ROC which is getting deployed, is currently at 27%. Based on the capital employed, if you take the goodwill, it is at around 20-23%.
Okay, fair enough, sir. Any reason for not giving inpatient revenue and outpatient revenue split? Because as I understand, our ARPOB is a result of inpatient and outpatient revenue both. And from FY18, we had around 150 odd crores of outpatient revenue, which got, sort of hiked to 280 odd crores in FY21. So is it because that outpatient revenue is softening going forward, or how is it?
No, there is no intention to, that we should not give because it is easy. Historically, we have shown, we have decided that we will give one revenue, which is the total revenue, and the IP/OP volume separately. If it is required by the analyst, we are happy to provide that information separately. Actually, this is the first time somebody has requested. If that is vital information for us, then we will discuss and then we'll happy to disclose those information.
Sure, sir. Could you just give the number for this quarter? Is it possible, broadly, inpatient revenue and outpatient revenue on company level, group level?
The information of this, I will, if you can drop me a mail, Bhavya, on this, I will be happy to share.
Sure. And sir, going forward, don't we see slowdown in cash flow from operations because already we'll be deploying money for a couple of acquisitions, and acquisitions are at lower margin. So cash flow generation, will it slow down going forward? Because right now your KIMS standalone is generating 30% margin, so your cash flows are also accordingly getting generated, and then you have Sunshine which is at 18%. So proportionately, will it reduce going forward? Hello.
This is the operator. The management line has been disconnected. I'll quickly get them reconnected. Ladies and gentlemen, the management line is reconnected. Over to you, sir.
Yeah, sir, was my question audible or should I repeat it?
Yeah, it would be better if you can just repeat it again.
Sure. Sir, going forward, will we see slowdown in cash flow from operations because our standalone KIMS was at 30% margin and your cash flows are a resultant of margins, right? And Sunshine coming at 18%. And we've already planned for 18 months of capex. So post that, will there be a slowdown?
No, I don't think so. Say the operating cash flow is a function of how much is the EBITDA and net of the working capital, how much we have got it converted post tax and non-cash adjustment or interest, etc. So for the quarter first, at the group level, since the receivables collection was good, so we have seen a very healthy net operating cash flow. What we are talking about is that after the cash flow from the net operating cash flow, whatever the amount is getting deployed for the capex, so the free cash flow will come down, right? That is what is the question.
No, sir. Cash flow from operations itself, because your Sunshine is at 18% margin, right?
So that is a net addition because there is no equity dilution for this. So whatever the EBITDA is coming from that net of interest and tax and plus working capital adjustment, that remains positive for the Sunshine. So that gets added into the net operating cash flow of the KIMS also. So at the net level, it will be higher only. Your question is that since it is 18%, the run rate of the addition may be little lower, but it will add on that.
Okay. Run rate may slow down, but there will be net addition only.
Yes.
Right. And so what would be the normalized ARPOB maybe for at least next 2-3 quarters?
So this quarter was a pretty normal quarter, and we believe that this is the ARPOB and ARPP, whatever we have shown, is a sustainable for sure, and with further improvement going forward.
Okay, so just one last question. If we look KIMS as a standalone business, we see revenue growth of meager 2-3% on sequential basis. Sequential basis. So any reason like what has led to this slowdown in revenue growth?
So two things that happened. One, the quarter has been quite bad. That is what we attribute most of the issue to. Bit of May has been quite bad, but things after that have improved, and we have seen a healthy growth in the standalone facilities. The other thing for degrowth in revenue is in our facility, one of our facility in Nellore, we empaneled ourselves from ROTC. So there's no impact on the bottom line. There has been some degrowth on the revenue. These are the two contributing factors for why the sequential growth is only 2%.
Right. Thank you so much, sir. That's all from my end.
Thank you. Next question comes from the line of Hardik Vora from Union Mutual Funds. Please go ahead.
Yeah, hi. Good morning. Thank you for the opportunity. I hope I'm audible.
Yes.
So the first, I just wanted clarification on the depreciation number. Is there any amortization of any intangible over here in the depreciation?
Yeah, it is a small portion has come because of the Sunshine goodwill, which is brand value which has come. So that amortization has come there. The amount may be some 70-80 lakh rupees because of that.
Okay, it's only that. Okay, just a clarification here, because the data that you used to show in the previous presentations on Sunshine Hospitals, the depreciation number over there, if I divide it into the months and see what it could be for the quarter, I would have assumed another 7 crores being added, but a larger chunk has been added compared to that number. So, am I missing something here?
Second part was this cath lab and some robo which they have capitalized in this quarter. So
okay.
Additional impact because of that. You are 100% correct.
Okay, understood. Thank you. So just one more clarification from the previous quarter calls. I think on this call there was clearly mentioned that there is this gap between the capacity and the operational beds for KIMS Group, X of Sunshine. And the indication given was that these beds will be operationalized. The gap, the balance 400 odd beds should be operationalized over the next 24 to 36 months as the demand improves. And that would also be an important growth driver going ahead. That continues to be the case, right?
So if you note that 30 beds we have opened at Kondapur, so it was 2590, now it is 2620. So that has got because of a lot of demand there. So as the occupancy goes up, definitely will improve. So that was also one point that 30 beds has got added operational there. This overall occupancy, you may be seeing it from 74 to 71% because of this 30 beds also. So some small portion is getting attributed towards that also.
Noted. So these beds, can we expect them to be operationalized over the next 24 to 36 months, or would it be farther than that?
Yes, 18 to 24 months time, yeah.
Okay. One final question from my side is on Sunshine. So I think you indicated that ARPOBs are higher, but ALOS is lower, given the fact that they are more focused on orthopedic. So when you achieve complete integration in the sense that the margins go to 25%, you have streamline the operations in line with the overall KIMS Group strategy, will the occupancy also go up to, let's say, 65-70% or higher, or would it be lower than the overall KIMS Group in terms of occupancy?
So I think we should get to a 65-70% kind of an occupancy at Sunshine.
So relatively lower occupancy but higher ARPOB is how the that hospital would play out, right?
The Telangana matured is at around 75. We are pretty confident that Sunshine will get to 70%.
Okay. That's all from my side. Thank you.
Thank you. So, Rahul, if there is no other participant, we have some time pressure for some other engagement. Can we conclude in next 2 to 3 minutes time?
Hello. Am I audible, sir? Hello.
Yes.
Yes, sir. We can take just last one question. So, Renju, can you please take the last question?
Sure. All right. The last question comes from the line of Nidhi Baradia from Envision Capital. Please go ahead.
Hello.
Yeah, Nidhi, please go ahead.
Yeah, hi. Thank you so for taking my question. Sir, I just wanted to ask that Bangalore is a pretty new geography for us. So, and plus it is a crowded market also. How are we planning to go into that market, and what would be our focus area in that region specifically?
So, like we mentioned in our previous calls, Bangalore, I don't know why people perceive it as a very crowded space, but a lot of the hospitals that entered the market in the last 7-8 years, they have been doing extremely well. All the large hospitals, about 200-250 beds, have been able to scale up to 70% occupancy with healthy margins. So there are pockets within the city which are still untapped, and that's where we are looking to focus on. And the city also comes with a lot of growth potential for the future. So once we establish a few of these pockets, we have the opportunity to scale up more hospitals in that city.
Okay, sir. Yeah, that's it from my side. Thank you.
Thank you.
Okay, thank you all for your participation. As I keep saying, you are our growth engines that keep the company moving ahead. I'm happy with the regular interaction with you, as it provides us good insights in protecting and promoting the interests of your company. Once again, I thank you for your active participation and contribution.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.
Thank you.